FX Devs, your mentor, back again with another video. So in today's video we're gonna be talking about forex. Now we're gonna be analyzing the market, guys. I hope you stay with me till to the end of this video. I'm going to be analyzing some indices with you guys, so don't forget to subscribe, hit that like button, follow up this channel in order to be getting notified whenever we upload a video. But this channel is mainly for analysis, guys, so whatever video we shall be uploading, we shall be analyzing the forex market. So without wasting time, let me head to my charts and I get some pair to analyze. So we shall be focusing on volatilities. Let me hope most of you guys know what volatility is. So volatility index, these are synthetic indices, whereby these indices, they are just programmed by an individual, but it only stays to the strategy which you use, guys. So if you have a good strategy, you can be profitable in all the markets you see in this world. So everything works with analysis, technical analysis. So if you got the right tools to use in the technical analysis, there is no way you cannot make money. So the first pair we're going to be analyzing is volatility 75. So that is the first pair we're going to be analyzing. So we as FX devs, when you are analyzing the market, we start with the higher time frame. We start with the higher time frame, lowering up to the lower time frame. Let me first indicate all this. Okay, so we're going to start with the daily time frame to get a clear picture of the market. So this is the daily time frame. So remember, this is the top-down analysis which we use, we as FX devs, your mentors. So I'm going to start with analyzing this pair. So I'm going to start, what we start focusing on is, we start focusing on identifying the major market key levels, like why is the market respecting more times. So those are the levels we're going to be focusing on. So when you see there is this level, let me lower it a little bit. There is that level. I can see also there is another level here. I can see there is another level here. There is another level here. There is also another level here. So remember, all these levels I'm trying to identify, at some point they act as a support level, at some point they act as resistance levels. So let me first delete all this. Now we're going to start by analyzing our major market key levels by drawing our horizontal line for them to be identified. Remember, we are in the highest time frame, which is the daily time frame. So I'm going to zoom in. So we have this support level. We also have this support level. We also have this. I think you can see I'm catering all these levels which have been touched so many times, like retested so many times. That's why I'm trying to identify all these levels for you guys. Remember, the market, there is no way it can pass through all these levels without retesting it. So that's why I'm trying to consider all this stuff. We also have this, so you can see where the market is currently playing out from. This is our resistance level as well. We also have this resistance level here. So getting a clear perspective, at the moment we say the market was in a little bit downtrend, whereby it was making the higher, lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. It came back down, made the recent lower low, then it pushed all the way to the upside. So the next thing we consider is drawing our support and resistance trend lines. So I'm going to get that for my support and resistance trend line. So let me help you guys, we are moving together. So this is our, I think, let me change this color to maybe orange. Yeah, let's go with this. So when you zoom in, you see the market came here, gave us first touch, came here, gave us a second touch, then it came back here and gave us a third touch. Hope it's seen clearly. So this was the first touch, second touch, third touch. So remember, we anticipate that the market, the way it moves, it respects the history, like what it made in the time back then, it can also repeat, like the market keeps on repeating itself. So when you look at this trend line of ours, which is our resistance trend line, the market in 2022 respected this level. It was 4th of November. It respected this level, so it didn't break it. So sellers jumped in the market and they shot to the downside. We got some little bit consolidation, we shot back again, we came back. So this time round, when you look at this level here, let me make it light for you guys. Let me choose another color. I think we use this. So you see, when it came back, this push, it didn't reach this resistance level, so it played around. So when you look at our levels which we have identified, this was a clearly fake out, whereby the market came but it didn't reach this level, so it made a fake out, dropped again, sellers jumped in the market, it dropped again, came back. Now this time round, the market retested our resistance level, pushing back to the downside. It also came back, and recently it made another touch. So remember, now we have two confirmations. The market came back on this resistance level. We also have another confirmation of our zone, which is our resistance zone, and we also have another confirmation of our resistance trend line. So I think let's jump into the 4-hour time frame to get a clear picture. 4-hour time frame. So when you move into the 4-hour time frame, let me zoom out. you see the market keeps on dropping. Whenever it reaches this resistance level, it drops. Whenever it reaches this resistance level, it drops. So let me try to zoom out for us to get another picture. So when you try to zoom out this chart, you see the market came and gave us a little bit chart pattern, which is called a double top. So double top, usually these patterns are reversal patterns. So whenever you jump into the markets and you come across these patterns, just know the market is going to reverse. A clear example which I can give you, or explanation I can give you, is, remember, when you come around these reversal patterns, first they must be identified on the zone. It can be a supply zone or a demand zone, or it can be a resistance level or a support level. First, number one. Secondly, they must also be identified on our support or resistance trend lines. So when you get all these aspects which I have talked about, there is no way you can miss a trade on any pair. It can be forex pairs, it can be indices, it can be all that stuff. So let's move ahead. Now when you jump into the hourly time frame, so in the hourly time frame, you can see that we have a head and shoulders pattern. So this is our head, this is our left shoulder, and this is our right shoulder. So remember, double tops, head and shoulders pattern, these patterns, they are reversal patterns. So whereby whenever you come along and see these patterns formed in a zone or trend line or supply and demand levels, just know that particular currency or index is gonna reverse. So if I'm to enter this trade, I think it has already broken our neckline, whereby we shall be anticipating some sales on this particular trade. Let me see, where can we place our first take profit? So you must come back to the higher time frame in order to get our, like we said, those reversal areas whereby you expect the market to be reversing. So when you zoom out, you can see that on this particular level which I have drawn our zone, this level has been respected by the market so many times. 1, 2, 3, 4. It has been respected 4 times. So it comes in my mind that this market cannot drop. It can drop fast and consolidate on this area before it continues dropping. So that's a clear confirmation that we can enter our trade. We can enter our trade VIX 75 sales from here. Remember, we are risking 2% per trade on our account. Let me say, if you have like a $100 account, risk, like, don't exceed $5 per trade or $3 per trade. So we can enter this trade of ours here. We risk 2%, aiming to make 5%. So I think for those who are trading VIX 75, this is the right opportunity to enter with sales on this particular pair. Yes, so this is the right time to enter this trade and collect all the pips all the way from here to the downside. Okay, now the second pair I think we're gonna be analyzing is volatility 50, index. Remember, all these are indices like I've told you. So we're gonna be analyzing one by one at a time. So let's move to our high time frame. Like we said, we start from our high time frame, jumping to the lower time frame. So we start by identifying our major market key levels. So we have a support here, support level here. We also have another level here. We also have another. You see, I'm trying to identify where the market has been respecting so many times. We also have this level here. I think you can see it, guys. We also have this resistance level here. So all these levels are being respected. I think you can see, clearly see. So going ahead with this pair, what we consider next after identifying our support and resistance levels is we consider drawing our resistance trend line. So that is our resistance trend line. So this resistance trend line, it gives us a confirmation that whenever the market comes and touches this trend line, it does not exceed this trend line. So whenever it taps on that trend line, it just drops. So what does this mean? At this particular level, we have a lot of sellers on that level. So when you reach on the bottom of the level, we have buyers. When you go to the top of the level, we expect always sellers to jump into the market. So let's scale down to our 4-hour time frame and see what there. So at the moment, as you can see, the market is playing around our resistance level. So that's where the market is playing around. So let us draw our small zone here. So at the moment, the market is playing on our resistance level, but when I try to analyze the market, I can see this particular trend, this particular pair has a trend in trends. Like we have a downtrend in an uptrend. What is it? What does this mean? Like you can see the market is making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So it recently made a high high, came back, made a higher low, came back, made a high high. So before it moves back to make another higher high, it must come back to make another higher low in order for it to make another high high. Let me try to show you in details. So expecting this market to come back here to make this higher low before pushing to the upside to make that higher high, heading to our resistance level. Remember, on this resistance level, we are expecting the market to drop whenever it touches on this level, because we have a lot of pressure from the sellers on this particular level. So at the moment, this trade, we haven't got any confirmations to enter this particular trade. So all you have to do is to be patient and wait for the clear confirmations in order to play around with this particular trade. So as you can see at the moment, this particular pair didn't get the energy of breaking through this resistance level, came back down, made a correction, made an impulse move, At the moment, I see this particular pair is trying to make a double top. So after confirming this double top, this particular currency will be able to drop down to the downside, and we be expecting more sales. So that's all I had to share with you today, guys, in our particular video. Stay up with us. We shall be uploading more videos concerning about the technical analysis in the forex market. Don't forget to like and subscribe to this channel, because we shall be uploading so many valuable information talking about indices, commodities, currencies, all that stuff. Nice day.